Hey Bowtie Nation, you know we love talking dividend stocks here on the channel, but for all that income, one thing is true. They will never make you rich like tech stocks. Case in point, just look at the returns on the tech-heavy NASDAQ index fund, the QQQ, over the last 10 years against one of our favorite dividend stocks, the SCHD. Now that 115% return on the dividend fund is a very respectable 8% a year, and along with the 3% dividend puts you in double-digit return territory. But it still gets blown away by the 402% return on tech stocks in the NASDAQ, a 17.5% annual return. So even for you diehard dividend investors out there, you need some of that growth that only tech stocks can provide. For that, I'm going to reveal 3 of the biggest trends and 7 tech stocks to buy that will grow your portfolio. I want to get started with our first trend and 3 tech stocks to watch, but the reason I'm focusing first on these trends is that's going to be your best opportunity to buy stocks you know will grow. You see, starting by trying to pick stocks from the 2,500 plus stocks trading in the NASDAQ is like trying to find a good movie on Netflix. You know there's something good, but good luck finding it. Instead, you want to start with those big universal forces that are going to change the world over the next 10 years. Trends like artificial intelligence, robotics, and electrification. It's much easier to see these trends developing and the potential in them because they're all around us, already changing our lives. Then you go into these trends and look for those handful of stocks that are going to benefit from each. For example, you might find 20 or 30 tech stocks really dominating that trend in robotics. Now that's still too many stocks to buy, but the beauty of this kind of top-down investing strategy is even in those 5 or so stocks you buy within that group of 30, even if those 5 don't dominate that growth in robotics over the next decade, you still know you're going to make a lot of money. That big universal trend, growth in robotics, is just so powerful that it's going to lift all 30 of those companies, and while maybe only a few are going to generate the kind of return NVIDIA has made, 186 times your money over the last 10 years, all the stocks in that group are going to be posting very strong returns that will make you rich. So looking for those tech stocks to buy right now, let's start with the biggest trend, artificial intelligence. That trend to a general AI system is advancing faster than anyone expected. When OpenAI announced its ChatGPT-3 in 2019, researchers estimated we were still 50 years off from a truly intelligent model. Now, with the GPT-4 update and models being developed by Google, Amazon, and others, researchers estimate we're within 8 years of a general model, and that estimate is bound to come down further, possibly even to 2026. And it's not just YouTubers creating impossible images for their videos, like Gandhi's time-traveling adventure. AI tools are already boosting productivity and profitability for companies. Developers using Microsoft's new Copilot saw productivity more than double, and the cost of writing content has plunged from over $100 per thousand words to just pennies. In software alone, ARK estimates AI could be a $13 trillion market by 2030, more than 13-fold growth in less than 6 years. And while all the focus has been on semiconductors, the processing power of a computer, I want to focus on the next phase in AI for our tech stocks to watch, the software and the services companies that are going to really unlock this growth. SoundHound AI, ticker SOUN, has come off its $10 peak this year, but is still well above that $3.77 a share when I first recommended it in February, and I still like this leader in conversational AI. SoundHound builds AI assistants for businesses in more than 25 languages, and the market could be much larger than even the $160 billion market the company estimates. You see, SoundHound's competitive advantage could be in its ability to reach a deeper meaning faster in its programming. Its AI combines the automatic speech recognition, or ASR, and the natural language understanding NLU steps you find in typical voice AI software into just one step to understand those contexts of conversations in real time. That in turn is backed up by a patent library of more than 260 patents through speech recognition, natural language processing, and machine learning. The stock surged 150% in the first 2 months of the year when NVIDIA reported a $3.7 million investment in the company. Again, it's come off that excitement, but that next big win for AI will be in the speech recognition area, and SoundHound is positioned for that. Also dominating its niche in AI is Adobe Inc., ticker ADBE, a leader in digital media and publishing with a suite of products from its Acrobat PDF software to video editing software Premiere. Adobe is primed to grow with our digital lives and is positioning to benefit from the use of AI in the creator economy and entertainment. The company has already integrated AI into its Firefly and Sensei products, with the results pretty amazing here. With generative AI prompts, you can change video and images with just a few clicks. Adobe's Premiere Pro is already the leading video editing software, and This is going to keep it there. Adobe's revenue growth has slowed down, but it's still a respectable 10%, which is good for a $200 billion company and could see a boost on those recent AI improvements to its products. Put that revenue growth, though, through its strong 39% earnings margin, and you get a company churning out the profits. You don't hear much about Alibaba's AI progress, but it could be the next big contender for growth. The company's QWin72B has had the highest MMLU performance among open source models and is competitive with even the best models by Alphabet, Anthropic, and OpenAI. Slowing growth in China and a 2022 crackdown on tech companies have hobbled shares of Alibaba, but the stock is now deep into value territory. Earnings could be as high as $9 a share this year on revenue to $130 billion. That would put the shares at just 8.3 times on a price-to-earnings basis, an 83% discount to the valuation multiple on shares of Amazon. So at this point, any good news, like a larger rollout of its AI LLM or growth in any of the other segments, could send this stock higher. We've got 2 more trends and 4 stocks to highlight, but if you want to see the 5 stocks I'm buying for the next 30 years, my forever stocks, look for the link I'll leave in the description below. It's a free report I put together with the Motley Fool, some of the biggest stocks in my portfolio. These are the stocks I'm following in these major multi-year themes, with one of the picks up 100% and the group up an average 94% last year alone. That report is totally free. You're going to see the first stock immediately, and they'll email you the full report with the other stocks. It's an easy way to support the Let's Talk Money community and see some of my favorite stocks to buy, so look for that link or just tap the QR code here. Potentially unlocking a $24 trillion market, our next trend and 2 tech stocks are in robotics. Advances in production have cut the costs in half for industrial robots over the last 10 years and nearly doubled their use in manufacturing. This curve is going exponential, and it's easy to see why. Computer vision advancements and AI have enabled robots to surpass human performance in their industrial settings. Robotic performance in picking and sorting has jumped 33-fold in just 7 years, while some humans seem to have trouble picking their noses. Just going off Amazon's history, and as robotics develop for use in other industries, companies are likely to start using more robots than humans. Amazon now has over 40% of its workforce robotic, from just 24% 5 years ago, and more than 1 million robotic workers. That trend could create a $24 trillion market in household and manufacturing robots, according to ARK Invest, along with the productivity boost for users. And now, before I show you those stocks to watch, I want to go back to this chart, and I love that it says robots are freeing humans from tedious tasks. Okay, folks, wake up call. Every company wants to say, oh, of course, we're not going to replace our workers. Use of AI and robotics is going to create new, exciting jobs for people, not put them out of work. It is bullshit. Robots will not only free humans from tedious tasks, they're going to free humans from a lot of jobs altogether. It's going to happen, but instead of fighting it, instead of bitching about it, our job as investors is to get as insanely rich as possible before that happens, that we don't have to worry about that job anyway. And you do that by investing in the companies that are going to benefit most, like Amazon, ticker AMZN, which not only uses its robotics in its warehouses, but is commercializing them as well. Amazon had to terminate its planned acquisition of iRobot after regulators in the EU threatened to block the deal, but it already has its household robot Astro and is developing a humanoid robot that could be repurposed for consumer use. Not only is Amazon positioned for this robot uprising, but is primed to benefit in the AI trend with its generative AI models and through cloud services on AWS. Of course, Amazon recently hit a new all-time high, nearing $2 trillion market cap, so it's not cheap here, but it's going to continue to dominate these trends, and you need to be a part of it. UiPath, ticker PATH, isn't the physical robots you might think about in this trend, but the robotic processes through software. This kind of business automation is going to be key for a lot of the companies, and UiPath is a leader in that machine learning and applications making it possible. Management is estimating a market potential of $60 billion, double the current opportunity, and even a fraction of that would be a significantly higher revenue. UiPath scaled to over 2,000 large customers in the last fiscal year and is guiding to $1.5 billion in revenue this year. That's 19% growth from last year. We've got one more trend to highlight, one that drove a profit of $67,000 in my portfolio last year, but I want to get your input in this as well. What major trends and tech stocks are you following? So let us know in the comments below. What are those big universal trends that you're looking at that's going to change the world? And what are the tech stocks that we should be watching? Our third trend, online sports betting, is surging in the United States with 124% annual growth to $120 billion market last year. and the potential to reach nearly $500 billion a year with future legalization. I rode DraftKings' market dominance all the way up last year, buying 3,000 shares for about $12.35 each and pocketing over $67,000 in profits, a 182% return in less than a year. I still think DraftKings wins in this trend, but it's gotten even more expensive, now trading for a price of 5.6 times revenue, so I'm shifting my attention to another player in the space here. Penn Entertainment, ticker PENN, which could be a buyout target eventually on its recent Disney ESPN bet deal. Penn combines traditional retail gaming with 43 properties in 20 states, along with that faster-growing online marketplace. The company signed a deal with Disney and ESPN late last year to launch ESPN Bet, paying ESPN $1.5 billion over 10 years along with 32 million shares of Penn. And that deal has been very good for the company, driving more users in the first 2 months than was expected over the entire year. The launch also nearly tripled the company's monthly users in its internet casino business, and this year could bring that growth from access in New York and North Carolina. Not only does ESPN Bet continue to fuel growth, but Penn is a much better valuation at just 0.4 times on the price-to-sales basis versus a valuation of nearly 5.7 times for DraftKings. I'm also watching shares of Roblox Corporation, ticker RBLX, not in that sports betting trend, but in a related trend on gaming monetization. AI is turning gamers into potential developers, giving them the tools to easily create their own games. Not only has AI made it easier and faster to develop games, but it's driven a 99% decrease in the cost of creating 3D assets. Roblox takes this a step further, simplifying game creation on its platform. For example, my 11-year-old son is in a Roblox game developers class, and he loves it. Roblox has already delivered more than 470 million experiences globally, 52 times the number of PC, console, and mobile games combined. And these game platforms are just starting to really monetize those experiences, with per-hour monetization still well below benchmarks for content and audio platforms. Now, Roblox is still unprofitable, but growing revenue by nearly 20% a year, and has come down from that crazy valuation post-pandemic. Shares are now at 8 times on a price-to-sales basis, closer to where I like to see them, but this is one I'd probably leg into with multiple purchases over time to see if I can get a better valuation while I wait for that upside. Get your free report and see my forever stocks up an average 94% last year alone with the link in the description below. Or click on the video to the right to see an option strategy I'm using to get shares of Nvidia for an 88% discount. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.